Okay, so a very good morning from a rather sunny England. Thanks so much for taking the time out of your day to be with us. Although I see some regulars here, I also see some new faces, so welcome. My name's Aaron Hill and I'm one of the market analysts here at FP Markets. Now, so this presentation is really a follow-up to the webinar I gave on May 24th on the Quasimodo formation. As I mentioned in that webinar, the Quasimodo arrangement, in my experience, it provides traders with an almost objective method of plotting support and resistance in the market. This can, of course, be a blessing for newer traders, struggling with the many ways in which traditional support and resistance can be applied. Before I continue, I just want to check that I'm coming across loud and clear and the welcome slide is visible. Excellent, thanks guys. Excellent, brilliant, thank you. Also, for those who were at my previous presentation on the QM pattern, I'm curious if you had the chance to look into it further, and did you conduct any form of back test, and if so, how did that go? It'd be great to know any experience you've had with the pattern since I went over the pattern in the previous presentation. Okay, excellent. Okay, cool. Okay, so look, as I highlight in every webinar, a recording of the presentation will be available through a number of avenues. The easiest, in my opinion, is through the FP Markets website. Look for resources on the upper menu of the main web page, and under the education column, you'll come across the webinars selection. Alternatively, you can check out FP Markets YouTube channel, or simply just wait for FP Support to send an email on how to view the recording shortly after the live session comes to an end. Okay, look, so as usual, before we dive into things, let me just quickly run through the disclaimer on screen. The information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. FP Markets does not give any warranty or representation as to the accuracy, reliability, or completeness of the information contained in this material. Look, guys, so the nuts and bolts of this disclaimer is really there to tell us that anything discussed or presented here is not investment advice, and you should always, as I say in every webinar I give, you should always do your own research in anything trading and investing. So look, I don't intend to bore you guys with repeating old content. 1 second, guys. Is it possible to have a link to your previous webinar, which I missed sadly? Look, you can view all the previous webinars on the FP Markets website. As I said at the beginning, you can look under the resources tab on the upper menu of the main web page, and through the education column, you'll come across all the previous webinars given by me and my colleagues. Okay. So look, as I said, guys, for this webinar, I don't intend to put, but look, as to that comment I just got, just received, I'm going to go over the basics of what I went over in the previous webinar, so you're pretty good to go, I think, here. So look, as I said, I'm sure you understand it's imperative I review what we covered when we last met, which was what a QM is, the correct application of the QM on charts, and the use of QM in trading. For me personally, as I said, I've been charting for nearly 12 years, and the QM is one of the, shall we say, more powerful and reliable ways of determining support and resistance on charts, which is why I'm surprised it's not a more talked about approach. How I intend to move forward with this during this presentation is provide a brief recap of pattern structure and application, so the patterns arrangement. For traders present at my last QM webinar, you'll also note I will be using some of the same slides. The next point I'll go over is some very basic chart examples of the QM. Hopefully this will refresh what we looked at previously. And finally, I'll go over some live analysis, you know, levels to keep an eye on going forward. At this point, do fire over any questions and any charts you want me to check out. Look, we all had to begin somewhere, right? So if I can help some beginners here, it will be a job well done in my humble opinion. So look, without further ado, let's change the slide and get into it. So as I said, this is a slide from my previous webinar. You know, although this slide is basic in form, for me, it does a good job in showing you the arrangement of the QM pattern, which is also sometimes referred to as an over and under pattern, I believe. As you can see, it offers a bullish and bearish scenario constructed of 5 legs. So the first leg is here, second leg, third leg, fourth leg, and fifth leg. In my last presentation, I also underlined I've spent countless hours, and I couldn't tell you how many hours, but it's countless, over years, backtesting the QM and found without any assistance or confluence, I guess you might say, the QM delivered a relatively healthy win ratio of between 55 to 65%, and handed over an average risk reward of 2R, so that's 2 times the risk. One thing I will point out is that backtesting results and live trading, as I'm sure most of you here are already aware, are often different. This could be due to emotional pressures. When I say emotional pressures, I'm trying to differentiate between demo trading and live trading. As we all know, there's not much emotional contact with the demo account. It's when you put live money into an account and you start seeing your account go up and down, that's when the emotional pressures, you start feeling the pressure. Let's put it that way. So look, the market environment could also be another factor, of course, but you know, a thorough backtest nonetheless should cover all. Good day, hi guys. As I said, look, a thorough backtest should cover all market environments. This includes trending markets and range-bound settings. Okay, look, and finally, the QM pattern is considered a reversal signal. This is a configuration that, you know, that essentially forecasts points on the chart in which price could reverse direction. So this not only refers to trend reversals, but also settings in which traders buy dips and sell rallies within the prevailing trend. I also have a couple of charts where I'm going to show this in action as well later on in the webinar. So also the friendly looking chap below is how I believe the Quasimodo got its name. The fictional character Quasimodo, the main character in the novel, The Hunchback of Notre Dame, is shaped similar to a bearish Quasimodo pattern. The poor chap has a somewhat deformed head and shoulders, as does the bearish QM. But look, as I said in my last webinar, for those who were present, the important thing to take away from this is the QM is a fake out formation. The head points at here and here are the fake outs. So look, with the bearish QM, we fake out the previous higher high here. So we drive through there, and you know, movement like this within a trend would of course trigger breakout traders, of course breakout buyers at this point. In the way of breakout, in the way of buy stops at this point, and it also puts the counter trend traders under pressure. So this is typically referred to as a ball trap because it traps the balls, right? Yeah, that's all I really want to say on that. So I don't really want to confuse you too much, as we're going to go into more detail shortly. So let me just click over. Also, really quickly, as I highlighted again at the previous webinar, I think it's important to cover this point again, as I received a couple of questions relating to the difference between a QM and a head and shoulders pattern. I'm sure you can see by the slide there is a clear difference between the two formations, despite both configurations offering reversal structure. The first should I say, notable deviation is the QM pattern lacks a right shoulder. While to form a valid head and shoulders top, as in the example on the slide, we require 3 peaks: the left shoulder, the head, and the right shoulder. Look, guys, I'm sure you guys already know this. I'm just trying to highlight the point, the clear differences between the two. So at this point, you might be thinking the bearish Quasimodo and the bullish Quasimodo does have a right shoulder at this point here, and you would be right. However, this is where QM traders actually enter the market, while the head and shoulders traders would be waiting for a neckline breach at this point here to engage in the market. This leads us to the second difference, the neckline. As I said in my previous QM presentation, the neckline of a head and shoulders top, as is the example here, is generally positioned either horizontally or in an ascending position. This is due to the entry trigger of a head and shoulders top, right? So being caused by a break of the neckline. And you know, a downward sloping neckline, as what you would get with a bearish QM here, you know, I don't really need to say it, but it would place the head and shoulders trader at a somewhat disadvantage in terms of entry and stop. So when I say this, so imagine the trough between the head and the right shoulder is at this point here, and we have a neckline facing it in a descending position. The break, the entry trigger would be around this point here, right? So look, I'm not a head and shoulders traders. I rarely trade the pattern, so I'm not too sure on the entry and exits. But from experience, I know that a lot of stops would be above the right shoulder and above the head. So you can imagine even the most aggressive entry would be down here somewhere, and the stop would be up here somewhere. All right, that might suit some traders, but for me, I think that's too large of a stop when you could have already been short at the bearish QM. These are the only two clear differences I'm aware of, guys. So if you see something I'm not, please do let me know, and we'll go over that together. Give me a second, guys. Oh, excuse me. So, look, again, those who were present at my previous webinar will also likely recognize this slide. There was a bit more detail on the previous slides, but I've removed that because I want to go over this in a little bit more detail. This is where I attempted to demonstrate the QM formation, a QM top in this bearish Quasimodo pattern, so a top. And you know, highlight its makeup in terms of chart psychology, if you will. So as the QM is a reversal structure, we need some form of trend preceding the pattern. So in the case here, we have this by way of a series of higher highs at these points here and higher lows at these points here. Look, I'm sure most of us here are already aware that traders and aware of the traders and investors trending markets attract. Obviously, trend traders will be drawn to this movement, buying the dips at these points here, as well as breakout traders with their buy and stop orders plotted above the previous higher highs at these points here. So when I say previous higher highs, I'm referring to these points here. So there'll be buy stop orders at these points here, and these are the traders that are anticipating the breakout, right? And they want to be in early. And also, we have the counter trend or contrarian traders who look to fade the uptrend at points of resistance found through previous action. You know, this coupled with bouts of profit taking causes these points on the chart to form, and these are typically, I refer to them as retracements within the prevailing trend. We then see what's known as a lower low form, which, as you can imagine, places the breakout traders who bought at this point here under considerable pressure, and that will likely squeeze them out. Oh, excuse me, guys, my cursor's disappeared. So look, once we form a lower low at this point here, I'm just going to repeat myself. We have breakout traders that bought here, which will be under considerable pressure at this point here, if not already out of the market. So I'm just trying to think of a way I can simplify this, but look, also we have this lower low would have also triggered trend traders. Look, so the trend traders that bought on the dip at this point here would have likely, as far as I'm aware, would have reduced risk to break even after the higher high had formed. So when I say reduced risk to break even, I mean what they've done is if they've had their stops around this point here, they've moved their stops up to cover their risk. So with this move coming down, that's obviously taken them out of the market. And any traders that have got in later and put their stops below here, they've also been taken out. So with this movement, as I mentioned in the previous webinar, price then typically forms a pullback at 0.5 as larger traders attempt to fade stops taken from the previous higher low. This is this point here, which causes price to print a modest rally. I think of this as simply traders who understand where stops are usually placed and attempt to profit from this. So what they essentially do is set bid orders just below these, excuse me guys, beneath these higher lows. When I say bid orders, I'm referring to buy orders, pending orders. And so when the protective stop orders are tripped below this area, they essentially have sell orders to work with, which, shall we say, provides fuel for the bids. And this is what I believe causes the modest pullback. So we have retracements within an uptrend, and we have pullbacks within a downtrend. It's only once we see price connect with the QM left shoulder do we know we have a possible bearish QM situation, and could see sellers step in from here. So look, leg one is the bullish wave within the uptrend. Leg two is the retracement again within the uptrend, and the subsequent rally to the higher high is simply that. It's a rally to fresh highs. Leg four, as I said, forms the lower low, and leg five pencils in the pullback, which brings us to the QM left shoulder. An important point to be aware of course, is where to place the QM left shoulder. Now, this can confuse a lot of newer traders, but an easy way to remember this is to it would be between the apex of legs 1 and 2, okay? And then that's extended through the formation to connect with leg 5, namely the pullback. So let me just check if there's any questions to this, guys. Okay. We have one question. Is the tip between 4 and 5 important? Is the dip between 4 and 5? Yes, it's very important, Bob. So we have a question. Is the dip between 4 and 5 important? It's very important, because if we don't have a dip, which is the lower low, we're essentially dealing with a head and shoulders top, as I showed on the previous. Let me just switch back to that one. So if we don't have the dip between 4 and 5, which is the lower low, we're essentially dealing with with a head and shoulders top. Then see, this differentiates it. We need a lower low with the Quasimodo pattern, the bearish Quasimodo pattern, of course. Okay, I hope that answers your question. Let me just squeeze across to the next one. So look, the question is, why do these QM levels hold price? Quite simply, it could be for a number of reasons, but okay, I'm getting one more question. Hi there, what time frames are we looking at for this formation? George, we'll go over that very shortly. We're going to hit the live charts soon, and we'll look at time frames and things like that. But the long and short of it is they function on any time frames, but as usual, higher time frames do provide more of a higher probability reaction, in my opinion. And the good thing about the higher probability formation, the higher time frame formations, is you can drill down to the lower time frames and then search for the lower time frame QM formations. But as I said, George, we'll get to that very soon. So as I said, the question is, why do these QM levels hold price? Look, it could be for a number of reasons, but given we made a lower low within an uptrend, this would trigger trend traders. When I say trend traders, I'm talking about sellers within the counter trend traders. I'm talking about trend sellers. So they're anticipating a trend reversal. And this would likely have shorts come into the market along this pullback at this point. Not necessarily at the QM pattern, because it seems like a lot of people aren't aware of this formation, but you'll get a lot of sellers coming in at these points here. So another question would be, why do these retracements then work? Why do these formations then work with retracements and pullbacks? This is the movement that you'll see in the uptrends and downtrends within the prevailing trend. So look, aside from technical interest, i.e. buyers and sellers looking to get involved with the trend, within the prevailing trend, the QM can also be an ideal platform to fade stops. Now, look, I won't go into too much detail regarding this, as I'm pretty sure it will confuse a lot of newer traders. But imagine the move. Imagine the move here. Imagine the move here as we form leg 4 creates a supply zone prior to forming the lower low. Now, look, guys, a supply zone in this case would be a drop, base, drop. Okay, so all that is a drop in price, a consolidation forming, and then a considerable drop. So imagine that we have a supply forming within leg 4 prior to forming the lower low. So, many price action traders looking at supply and demand naturally will show interest in this supply area. And where would they place stops? So they have the supply base at this point here, and the stops would traditionally be set above the base. Now, if this is positioned below the QM, large traders will be aware of this and will place their offers at the QM pattern. Now, the good thing about the QM pattern is it's often hidden from sight. So it's hidden from sight to essentially fade these stops, which are not hidden from sight, if that makes sense, which when triggered will be buy orders. So just to recap on that, we have a supply formed in leg 4. With a considerable drop that forms the lower low, that breaks the higher low at this point, and obviously trend traders, sellers will be interested in this point here. Now, as we know, supplier traders will be placing their stops, will very likely place their stops above the supply zone or a touch above it, or a few pips above it. 2 to 3 pips is very normal. And if this zone is arranged just beneath the bearish Quasimodo pattern, this is when larger traders know that they can place offers here comfortably and know that the buy stops will drive price. The buy stops, when I'm talking about buy stops, you've got breakout traders above the supply, and not only that, you have protective stop loss orders. So the sellers that are selling the supply have the stops above the supply, which will be buy orders when triggered. So this momentum will help fill the offers here, which is a limit order, which is liquidity. Okay, so these will be triggered, and these moves will have fuel to push lower. Now, I hope I haven't confused too many people with that explanation, but these are just some of the ways I see that these areas really do function. And also, just as a quick point, if you find a Quasimodo pattern below or above a round number, so a big figure, so 120, 130, 131, things like that, these can act very well. This can help facilitate the fake out, which you see often occur at round numbers. I highlight this in my analysis when and if I see one occurring, but the crux of it is you have the Quasimodo pattern hovering beneath the round number, and obviously traders are going to be interested in the round number. And with the Quasimodo pattern being pretty much not invisible, but pretty much hidden out of sight, I would say, it's a good place to help facilitate a fake out of those stops, what is commonly called a stop run, and it can drive prices higher from that whipsaw. So we have a question from Andre, which is, so how often the percentage QM patterns happens in relation to head and shoulders, just from your experience? How often the QM patterns, I'm not sure, how often in percentage terms does a QM happen in relation to head and shoulders? It never does, because a QM and a head and shoulders is different, completely different patterns, as I hope I showed in the previous slides. Okay, guys, are there any questions about this, about anything I've shown on this slide? Because I've gone into a little bit more detail than I did before regarding stops and things. If there are, please fire them over now, and I'll address it on this slide before we move forward. If not, I'll keep going. Okay. So when I was learning about the QM pattern, I was a bit of a stickler. I noted literally hundreds of examples of QM patterns on charts, and I found that was the best way to really learn the intricacies of a pattern is by repetition. So first up we have, let me just try and think of a way to best demonstrate this. So look, first up we have the dollar CAD on the monthly chart. So all right, one more question here. Which time frame is more suitable for the QM pattern? Look guys, for time frames and things like that, as I just answered to one of the attendees, we're going to touch on that very shortly after I've gone over these slides, and we'll hit the live charts. Look, start preparing some charts if you want me to look at them during the live analysis. I'll happily ping over to them charts, and we'll go over some Quasimodo patterns that you think might be present, or QM supports turned resistances and vice versa. So yeah, please do fire over any charts you want me to look at, and we'll go over some time frames and things like that in that section. I just want to get through these slides before I hit things like that. So look, as I said, we have the dollar CAD chart on the monthly time frame. This is an interesting formation because what we have here is a Quasimodo support turned resistance. Now, as you can see, the Quasimodo pattern formed from this left shoulder here. We have the low, high, lower low, and higher highs. So when we come back down, we as you can see, we just hammered through that level. There was nothing happening there. But what happened is the Quasimodo support, as you know, typical traditional support and resistance, once a support is broken, it tends to become resistance. It tends to form resistance, and it's the same with the Quasimodo. So the Quasimodo support has turned resistance, but from my experience, the Quasimodo support turn resistance and resistance turn support are incredibly high probability areas to look out for. Now, I must make it clear that for a Quasimodo support term resistance to be valid, in my opinion, I require a clear break. Now, what I mean by a clear break is similar to a liquidity push, a search for liquidity. So it's a solid candle, it's a solid candle break. And the point to look out for is there's no upper shadows tagging this level before we drop. So it's a completely clean level. And as you can see, look at the reactions here. All right, it wasn't to the pip, but it's clearly reacting to this area. Now, a lot of traders will be asking at this point, now where do I place stops if that's a clean area? That's a very good point. So what you can do is you can see above this area, we have a clear, not clear, but a reasonably clear kink here, which is, for me, would be a supply because that was the decision point to push lower. So we'd either place stops above this area, more than likely at this time frame. All right, so as for entry, I would be looking at these levels here, but you can go into detail. You can go into much more detail with these, and you can drill into the lower time frames at these points here and look for the kink supply. So the supply that's, let me just draw on the chart actually. So you can look for this kind of motion coming down. So if you have a supply connecting with this Quasimodo support term resistance, then more aggressive traders can place their entry based on this supply, knowing it has the what's the word I'm looking at, the support, if you will, of a higher time frame Quasimodo support term resistance. So look, any questions on this chart, guys? Oh, also we have on this chart, I'm not sure if any of you guys have noticed, but we have also an incredibly long-term double top formation in the process of forming. So the two tops are here, and we have the neckline drawn across here. I think we've got a break already, which could mean technically the dollar CAD is heading much lower. Technically, that is. Okay, so any questions on this chart? If not, I will quickly switch over to the next chart. Okay. Okay, so this is the same chart. Just give me a second. So look, second on the table, we have what I like to call a complex Quasimodo support formation. You know, for any head and shoulders traders here, it's very similar to a complex head and shoulders pattern, which can have, you know, two heads, two right shoulders, for example. Okay, one second, guys. We have a few questions. How did you know that was the level where you can see the opposite side of the peak? Well, a few questions coming through now. Look, guys, can I just go through these slides and I'll address these questions in a few seconds. I've only got a couple of slides and then we're on to the live analysis. I can go over them, the questions on those slides, and then we'll hit the charts, if that's okay. So look, here we have, as I just briefly explained, a complex head and shoulders Quasimodo support. So when I say complex, we had two heads form. And as I said, you would have that with a complex head and shoulders. You could have two heads form, you could have two right shoulders form, or two left shoulders form. For any head and shoulders traders here, will surely be aware of that. So as you can see, this is a complex, as I said, complex head and Quasimodo support, and it reacted nicely. Now, do bear in mind that this is a monthly time frame, so this was a considerable move. Now, if you knew this at the time, you could have drilled down to the lower time frames and looked for a lower time frame entry here, and potentially, you know, registered incredible risk reward ratios from this point, knowing we're at a higher time frame Quasimodo support. Now, if you really want to try and be clever, you could also go into here. There's also a Quasimodo support from this left shoulder here, drawn across. So we have the low, high, lower, low, and high, high. I did check this high, high. It's about a pip above it, so it was a genuine Quasimodo support. So we come across there, and we could have two Quasimodo supports form at this point. Yeah, so that's really it on this chart. One more chart we have is the Euro Pound H1 chart. Now, look, all I've done is applied a handful of Quasimodo support and resistances here. As you can see, this is not a holy grail of trading. It's simply a method of applying support and resistance in what I believe is a more objective and reliable way of, you know, navigating the markets. So first up, we have the Quasimodo support at this point here, with a low, high, lower, low, and followed by a subsequent higher highs. Now, as we come back to the area, we can see that price nearly did test the area. It came within striking range of the zone. But what I did like to see, what I liked, was price actually dived. Oh, we did test it a touch there. We did test it a touch there. All right, so this is not a perfect example, but we did, just to highlight that, but we did get a nice breakthrough there. So once the break comes, once the break occurs, we don't see any upper shadows tagging the Quasimodo support, which is now resistance. With that being the case, look, I'm going to go into the psychology of the charts a little bit more. We formed a lower low, a lower high, and a lower low, which, you know, trend traders love, right? So there will be a truckload of sellers coming in at these points here, sellers trying to come in at these points here. And what happens is trend traders either place their stops above the previous lower highs, or the area encapsulating the lower high, which is this large zone here. So there'll be stops above there. Now, traders that understand chart psychology will know where these stops are placed. And if you understand where the stops tend to be placed, should I say, you can fade from these Quasimodo support term resistances into those stops. So into those, you're fading into pain, if you will, because you're not only trapping the breakout buyers that are coming above here through buy stops, you're also selling into all those stops for the poor chaps that are selling, trying to sell with the trend. Now, do bear in mind that the price could continue to go lower. It didn't in this case, but the price could continue to go lower. This is just a way of getting in extra sellers, getting into a trend through means of a fake out scenario. Now, I'm sorry, guys, I don't mean to confuse you. I was just highlighting some points that I noticed on the chart there. So also we have a Quasimodo resistance at this point, which failed. Okay, so price come above. Now, look, when I say failed, I mean for traders that have entered short at this point and placed stops above the head of the formation. Now, typically, I wouldn't recommend placing stops above the head. I would always look to the left of the price. Remember that. Stick that on your desktop. Look to the left. Always look to the left and see what's holding that QM head. Now, you can see we have a supply zone here, and you could have essentially sold this base here and placed stops above that supply here. All right. So also, this supply was the actual decision point to push lower. Push through that Quasimodo, the initial Quasimodo support at this point. And that would have protected you enough to probably reduce risk to break even and maybe even take partial profits at this point here. We also have two Quasimodo supports down at this area here. So the Quasimodo support at this point actually gave a small reaction, but nothing to get right home about. We come down and we broke lower. Now, irrespective of where you place your stop, either beneath the head of the Quasimodo support or beneath the holding supply. Sorry, guys, my cursor's disappeared. You would have lost. You would have lost this trade. It's as simple as that. Losses happen, right, guys? I'm sure most of us here understand that trading, you're never going to win 100% of the time. It's all about probabilities, the odds, the odds of trades playing out. And then finally, we have the really, picture perfect Quasimodo support at this point here. So left shoulder, high, low, and subsequent higher highs. So we come back down and we rally. So what I really liked about this point is always look to the left and always analyze your situation. So we know we've got stops coming in below here. There will be traders with stops below here. And there will also be traders with there's also a QM support. I'm not sure if any of you guys noticed that, but Quasimodo support joined from this point here, right across to here, which was taken out. So there'll be stops below here, okay? And we can obviously from the more extreme Quasimodo. So let me just clarify this. So these are extreme Quasimodo supports at the lower highs and the lower lows. Higher lows and lower highs. I think in this case, in the overall trend, that would be. So anyway. These are extreme Quasimodo support. So as you can see, it reacted very, very nicely indeed. Okay. And that's another point I want to drive home is remember the trend. So where you are in the overall trend. Now let me just hit these questions real quick. And let me just expand the screen. Just give me a second. Okay, can you look at FFX? What? I'm not sure what that is, Jerome. Can you tell me, is that a currency pair or is that the FTSE or something like that? Okay, from Travis, how do you know that was a level when you can see the opposite side of the peak? Travis, was that on, I think that was on one of the slides. I meant to write when you can't see the opposite side of the peak. Yeah, that's a really difficult question. I'm not sure what you mean, Travis. I'd need to see an image or something. Let me just go back onto these slides. I believe you were referring to, if you can help me out, Travis, that'll be really, really good. So what slide was you talking about? Was you talking about this one, the initial one? This one, okay. So let me just read the question. One, I meant to write, when you can't see the opposite side of the peak. What peak are you talking about? So we have the left shoulder, the high, the low, and the high. So I'm not sure what peak you're talking about. Do you mean, yeah, I'm unsure, I'm sorry. Let me just get to a few more questions before I try and address that. Could you please number the 1, 2, 3, 4 QM levels on a chart? I will do, Alberto, no problem at all. I'll do that on the live charts when we get to them, no worries at all. The next question, when you look at QM patterns, you look at price action first and look for bullish QM in upwards price action and vice versa. So look, Daniel, I believe you're talking about the chart psychology there. I always look at chart psychology. It's sort of ingrained in me now. So I know with a reasonably high probability where stops are likely placed, where retail traders generally place stops and trend traders and things like that. So I always look at that and I always try to converge that with the QM formation. And I always like the QM patterns when they're hidden from sight, and not almost hidden, but just you'll see with the QM formations, they're generally hidden from sight, so they're not really seen by other traders. And this can be a nice area for the larger traders that don't want other traders to see their obvious levels, and they want to take out the stops that's above that. That makes sense. I hope it does. Can we use Fibonacci to put stop loss over the head? 100% you can. I'm going to show a few examples of where the Fibonacci connects with the Quasimodo pattern in a couple of minutes. Okay, so look, guys, I'm going to switch over to the live charts. If that's right, we only have one chart coming through, the gold chart. Any other charts you want me to look at? Any other charts you've seen that you think it's a Quasimodo pattern? Now's the time to throw this in, and I can help you confirm if that is a genuine Quasimodo pattern or a Quasimodo support and resistance, or vice versa, and things like that. All right, just give me a second, guys. I'm just going to switch over to the live charts. Second. Okay, guys, just confirm you can see the euro-dollar daily chart. Just ping across yes, that'd be great. Just so I start talking to myself. Yeah, cool, excellent. Thanks, guys. So yeah, look, there's a few questions. Could you please number the QM legs on the chart? Okay, so look, so we have leg 1 coming up here. This is exactly the same as the slide. There's nothing different. Leg 1 coming up to this point. Leg 2 as the dip within the trend or retracement. Leg 3, the subsequent rally to fresh higher highs, and leg 4 as the lower low, and we have subsequent lower lows forming at this point, and lower highs. So this is an area I will be watching going forward. This is a Quasimodo resistance on the euro-dollar around the 23.11 mark. And what I really like about this, as I've briefly discussed, is there's going to be stops above these areas, right? There's obviously sellers interested in these areas here, in these points here. So there's going to be a ton of buy stops above here for breakout buyers and things like that, and protective stops in the form of sell orders that could potentially react. The chart is not clear. Okay, guys, can you just confirm if the chart is clear? I'm not sure why. I can see the chart. Okay, you can see the chart. Okay, look, okay. So look, I hope that's explained your question. Give you an answer for the Alberto for the number in the QM legs. But here, as you can see, we have a really good play on QM formations at this point here. This is something I really wanted to highlight. So we have the high, low, higher, high, and subsequent lower lows. Price then comes up, tests that QM resistance, comes back down and tests the Quasimodo support at this point. Now, I did briefly touch on Quasimodo supports and Quasimodo resistances forming within the prevailing trend, and this is one of them here. We have the low, high, lower low, and higher high. And look at the pinpoint reaction that this formed. This is just absolutely, it can't, for me, it just can't be denied. And what you can do, as I said, you can go into the, just remove that. You can actually go into the lower time frames here and find a more aggressive stop to achieve a better risk reward. So as far as I can see on this chart, there is the only QM resistance left, QM formation left, is the Quasimodo resistance, as I just touched on. So let me just check if there's any questions on this chart. Could you please look at the DAX H4? Will do, no worries. Okay. Let me just go over a couple of charts I've highlighted here. Now, look, this is a good example of, or a relatively good example of a Quasimodo resistance turned support. Now, look, you will see that price did stab into this level here, which I don't like. I like the clean break and no lower shadows attacking the level. It did happen here, but as you can see, price did subsequently respond from the base. I must also point out that a Quasimodo resistance in this case is only considered broken once the head of the Quasimodo is taken. So as you can see, price is now currently reacting to the Quasimodo resistance, turn support. Now, if we continue lower to this point here, this is the next Quasimodo support I would have on the radar, which it comes in around the 109.58 region. There's also one down here, the more extreme version, right? So that comes in at the 109.53-ish range, which could be an ideal. So what price could do if we do actually form a retracement. Sorry, the colors of the arrows are set to my analysis ones. Okay, so what we could do is price could bounce off that, give a small bounce, attract a ton of buyers, which will place their stops just below the head or below any structure to the left. And then what price may do is come back down, collect all those lovely buy sell stops around these points here, and trap and form what's known as a bear trap, which is quite self-explanatory. It traps sellers. All right, and then maybe a reaction off of this base could form. I hope that's clear, guys. The next chart is the Aussie dollar H4. Now, this is something I've also highlighted in my analysis. We have a Quasimodo resistance from this point here, which is at the 77.83-ish area, which aligns with what I like to call what is called I've actually forgot now the term. Oh yeah, Fibonacci clusters. Formed by retracement. So we have a retracement drawn from here to there. Now do know that the 50% is not considered a traditional Fibonacci level, it's just a retracement. But we have the 78.6, which is the square root of the 61.8. So we have these joining up here. So a reaction from this area is potentially on the cards. And we also have potential stops hovering above this range here. And as you can see, this is pretty hidden, right? See, not a lot of traders that follow Quasimodo formations will know that anything's happening here. The most they'll know is we have a rally base drop supply, which is understandable, I guess. Is it possible to see the previous chart for a moment to see the support and resistance drawn? It certainly is. Is that the dollar yen, this chart? Yeah, okay. All right, let me know when you've I'm gonna have to switch over now. Andre, is that okay? All right, excellent. Okay, so look, finally, we've got one kicking off right now, actually, with the euro pound on the M15 chart. Now, to answer the question with timeframes, as you've seen, it can work on the daily time frame. It can work on the, I'll touch on that in a minute, Travis, the dollar CAD. It can work on the lower time frames to the higher time frames. I prefer the higher time frames and then working down from that area, because you can often find the higher time frame levels provide a nice base for lower time frame patterns to form. So as you can see, we have here a Quasimodo support forming around the 85.92 range. Now, so what's happening here is we have a Fibonacci extension at 85.93. Now, a Fibonacci extension is not an extension, as most websites. It's incorrect how most websites are portraying this. The textbook Fibonacci extension is an extension of the retracement. It's a Fibonacci, so you have the Fibonacci retracement. It's an extension beyond the Fibonacci retracement level. So we have all the Fib retracement forms. Let me just draw it on, it'll be easier, wouldn't it? Just give me a second, guys. Let me just get rid of that. So we have the 38, 50, 61, 78. Okay. So we have the Fibonacci retracement drawn here, which a lot of traders will draw. And the Fibonacci extension is an extension of the Fibonacci retracement. It's not an extension to the upside or anything like that. This is the textbook way of drawing the Fibonacci extension. Just to be clear with that. So this is the 1.27 2% fib extension. We also have what's known as a fib expansion at 85.89. So we have some Fibonacci studies in play here. Now, just look at the reaction we had off this level. It's nearly to the pip. Obviously, it doesn't happen all the time like this, but as you can see, they do hold some weight within the market. Another thing, I just want to see if you guys can see it. There's also another Quasimodo support lurking around this area as well, sort of almost reinforcing this zone. Now, it's from this area here. I'm hoping some of you guys have seen it, but it comes from this point here. It's a larger, so this will be on a larger time frame. So it's actually supporting the, oh, sorry for my drawings, guys. Just, okay, so we have another larger low, high, lower low, and subsequent higher highs. So we have an incredible area of confluence here. Not only with the Quasimodo supports, we also have the Fibonacci studies as well. Okay. Let me just whip over to the gold chart because I saw that was, oh, not this one. Give me a second, guys. So gold, what time frame was the gold chart? Someone highlight, someone asked for the gold chart. Okay, I'll keep it on the white chart for now. Gold chart, let me see. Could you look at the, just trying to find the question. Gold, oh, daily, gotcha. Okay, daily time frame. Okay. Okay, look, we do have actually a Quasimodo resistance in play right now on the gold chart. I hope you've seen that, guys. We have a Quasimodo resistance in play right now, and it's reacting as we speak. What's also great about this, I'm betting that there's some Fibonacci confluence with this area, or close to the area. As you can see, we do have a 61.8 just above it. And we also have, we can also take it from there if we want, or here. And we also have a 78.6% fib confluence at that point. And also, who asked about the gold chart? Let me just check, just 1 second. Okay. So look, we also have a nice area of, I'm sure most of us here will realize that this is an area of resistance, right? Look what happened to this resistance. Price come up, tested it, and then eventually broke through. Can you imagine the amount of pain that was caused by this move here? Look, this is completely hidden. This area is completely hidden there, okay? The stops in this area are probably untold, okay? So look, why I know sellers will be active in this area is because we formed lower lows. Traders are attracted to these lower lows, and experienced traders know this, and they know where these stops are going to be placed. So we have the lower lows forming, lower lows coming up, sellers coming in, sellers still attempting to come in, and they're really in pain at this point once they get broken through here, because there's not really anything else till we get to the extreme of this move telling traders price action wise that there's resistance. And what happens is we've got some resistance forming off the QM resistance at 1907. Now, that's all I see on the gold chart for now, I think. I'm just trying to see if there's anything else on the way down. I don't really see much on the way down until around this point here. Nothing else really on this time frame. Hope that's cool for the gold chart. There was also one for the DAX. Okay, the DAX 30. Just give me a second. H4 chart. Oh, not that. The DAX would be under index. Okay, let me try and get the CFTe. All right, so the H4, where am I looking at? Okay, So we're looking at Quasimodo supports, I would imagine. Up to what point? I'm just trying to look for. So on the DAX, I'm assuming you were looking at this area around this point here, which could be a nice area to come down to. I'm just trying to get the actual 15,399-ish area. And the reason I know that this would be a reasonably 12th of April. All right, I'm just going to have to. So look, the reason I know this might be an ideal area to consider potential buying opportunities is this low here. Now, a lot of traders, now look, you can imagine the breakup, people know that this was formed from this area here. Now, there's going to be buyers coming in, dip buyers, quite rightly as well, because the trend is higher. They're buying, and then all of a sudden they've got their stops so close because they think a tight stop is generally better. And what happens is the Quasimodo support is just there, tucked just under that stop conveniently, with the stops, with the sell stops and things like that tucked underneath the protective stops, and price will highly likely bounce from that area based on the fuel they'll receive from the sell stops at this point. Just quickly, we have a question. Is the Quasimodo applicable on crypto? 100% it is, Michael, 100%. I'll quickly whip over to the Bitcoin chart. It actually reacted from a Quasimodo support in the last few weeks. Let me just go over dollar CAD. Just one more chart on dollar CAD real quick. Oh, oops. Time frame for the dollar CAD. I didn't see a time frame there. So we have the H4. So the dollar CAD has been in a considerable downtrend for ages. Let me just get the crypto one up first. I think I have that as my major charts. So look, just quickly while I wait for the answer for the dollar CAD chart, we have the Quasimodo support at this point here. So yes, the answer to your question, Michael, is 100%. It is applicable to crypto markets as well. As you can see, I haven't drawn it correctly to the point, but as you can see, the low, high, lower, low, higher, high, and we come down and we've stabbed right into that Quasimodo area, and we didn't breach the lows here. So this would have been a very, very high probability, high reward trade. Also, we have just to point this out, we have a potential bearish pennant forming, but it's breaking to the upside, so this might be validated sometime today if Bitcoin continues to attempt to recover. Now, I don't see any response for the dollar CAD, so I'm going to leave that there. So, guys, look, are there any questions that I've missed? Are there any questions that I missed? I hope you're all a lot more confident with the Quasimodo support and resistance now, because this is the second in the series. We have part 1 on May 24th, and hopefully I've gone into a bit more detail with these and shown you a few more examples of you know, how we can possibly trade these. Let me just go back to the H4. Okay, I'm on the daily. Okay. The H4 for the Quasimodo. Let me remove the volume. Right, so H4 bearish. Okay, bearish Quasimodo. Right, we do have one here, as I hope you've seen. This point here from that left shoulder across there. Now, why would that be? That's actually a really good example. So what we've done is we've formed an almost. We have actually formed a double. That's a really great example, actually. Let me just get the. So what we've got is a nice, almost picture perfect double top pattern, right? Double top, double top. We've broken the neckline, which is here. Well, we haven't actually broken it. Sorry, we've pierced it. We haven't closed below it. But if we close below that, but nevertheless, there will be stop loss orders above these areas, right? There will be a ton of stops above this area. This small area here, there's going to be a truckload of interest in terms of orders, mainly breakout buyers and things like that, and sellers that have got their stops tucked above there, thinking they're safe when really they're not that safe because you've got a Quasimodo resistance just above it, which is just has fake out to me written all over it. So Travis, is that the one you was looking at, the Quasimodo resistance there? If so, that's a perfect find. That's such a good, such a nice, yeah, brilliant, Travis, excellent. That's where I'll be looking. And the next one would be up here, in my opinion. Next Quasimodo support would be, excuse my drawing, guys. It's not perfectly straight, but you get the drift. Right, so let me just check. Oh, that's too fast. Okay, so look, I hope I've answered all your questions, guys. Let me just spin things back over to the oops, just okay. Right, so I think that's it from the team, from us. If there's no, oh, there is another question. The technical analysis course you did that has 3 parts. Are there certain educators or websites you would advise to look at? The technical analysis course, I didn't do a technical analysis course, Daniel. You might be referring to Gary. He did a course, I think it was 4 parts, 5 parts, which is definitely a must watch if you're interested in technical analysis. The guy is, in my opinion, he's one of the best. That's available on the FP Markets website as well. Yep, so look, are there any educators or websites I would advise to look at? Look, I don't really know, to be honest. I've been through my fair share of educators and would-be gurus and things like that. I'm sure most of you are aware it's a very, very difficult. It's a difficult business to learn when there's so many, so many gurus out there that can predict this, predict the market and things like that. It's a very difficult one. I think, I was mainly self-taught. Obviously, I've done the CMT levels 1 and 2, which I would highly recommend if you're really interested in technical analysis. Oh, CMT. Is that what you're talking about, Daniel, or the CMT? Oh, yeah, CMT. Yeah, I mean, look, guys, for any of you that are really interested in technical analysis and you really want to build your knowledge, technical analysis, as I said in my last webinar, I was, how to put it, I thought I would breeze through it because of my experience on the charts, but by God, it was incredible. It really opened my eyes, and I'm talking, it was intense for me. There's so much. Yeah, that's the one, Chartered Market Technician. CMT level 1, I think the book has around, it's about 700 pages. It's intense, guys. It really is intense. CMT level 2 is apparently the hardest one out of the 3, and it really was quite intense. And I mean, I was studying daily for about, I don't know, it may seem exaggerated, but it's 4 to 5 hours of study a day. It's incredibly intense, but I think it's worth it because it really opened your eyes to how much there is. But you won't find the Quasimodo pattern within that program. This is something that's that I've found that works, and over time. Are there any credible educators? I like Gary. I like Gary Burton. I think he's a fantastic guy. I would definitely look him up. I think if you continue to view these webinars, another question, how can we access live market order books, i.e. real buy and sell orders? That's a good question, George. That's mainly on the exchanges, isn't it? The live market order books. That's what I think. Depth of market, right? Is that what you're talking about? The DOM? It's mainly for exchanges, the futures market and things like that. I don't think you can get that on the spot market with the retail brokers. I don't think you can get that. You can get it through their own order book, through the brokers, like Broker Fed. I'm not too sure. The best people to talk to on that would be the risk team at FP Markets. They're highly knowledgeable, and they will get back to you with a solid answer. Yeah, so look, CMT, I would definitely recommend it, but do be prepared for an intense study. But it will open your eyes to the incredible amount. I mean, CMT level 3 is what I'm doing now, and it's more on system trading. And I'm finding that very, very difficult because I've never traded. So you have discretionary, you have non-discretionary, and you have partial discretionary systems. So partial discretionary systems are similar to what I've shown here, as in that you've got a structure, and it's up to you. It's your decision whether you take it. the entry. Then you have the discretionary, is which you go off by intuition, and then you have the non-discretionary, which is the systems trade, and that's what I'm doing right now, and it's really quite difficult, but I think it's worth it to have the CFTe designation. So look, can we contact you via FP Markets for questions on that? You certainly can, Daniel. You can get hold of me at marketanalyst@fpmarkets.com. And also, guys, look, if there are any specific topics you would like to talk about, would like the team here to cover, please also send in your suggestions, and we'll try and cover something for you. Also, look, be sure to register for the FP Markets, the Telegram channel, to get instant updates. That can be found on the main webpage of the FP Markets website at the, I think it's the lower left-hand corner of the website. Look, guys, look, I hope I've given you something to think about going forward with these Quasimodo patterns. I hope you can, and also do be aware that these can be used in conjunction with other technical tools, so the Fibonacci, so the trend study, so the psychology of the chart, where the stops are going to be placed, where traders are likely going to be looking to buy and sell, and things like that. This is not just, if you just focus purely on patterns, I think it's a very difficult way to trade. I think you have to form confidence of the areas and where it's formed on the chart. So look, guys, as I said, I hope you've taken something from this. One more, please. Can you treat Elliott Wave? I think we've got something on Elliott Wave actually coming through. I think this month, not by me. I think it's by Isaac or someone else. I'm not sure who that is, but that's Elliott Wave. And also, guys, Elliott Wave is covered in depth in CMT level 1. If you're interested, CMT level 1 covers that really in depth, the Elliott Wave theory. All right, guys. So, as I said, thank you very, very much for taking the time out of your day to attend this presentation. Have a great day, and I'll see you all again very, very soon.